asked not to onboard new clients. Help us understand how big is this positive, just a sentimental news, or it can do really well for the financials of the company as well?
As you would see that this business roughly contribute around 12% of the revenue, 12 to 13% of the revenue to them. And this piece have been constrained from a growth point of view because new merchant onboarding was not allowed for last 3 years. So all the growth in the recent past would have come from existing customer and no new onboarding has happened. And we see a lot of change in the online ecosystem that keep on happening because of hyper competitiveness in that business. So they coming back into the new merchant onboarding will definitely drive the growth for this part of their business. And essentially that will act as an incremental one-off trigger to drive the growth objective that they have. Secondly, payment business turned profitable in the previous quarter. So any incremental revenue addition in the payment business can be far accretive on the profit side of it. So that is purely from the leverage point of view. And more importantly, from a financial perspective, then is more from a regulatory perspective. Getting clearance on this was long due. So having this cleared also clears up some concern around that what are the regulatory feel about this business in the mind of different stakeholder and regulator, and that clearance is also a very big victory from an investor point of view.
But Rahul, I think the question is also how much time it will take now for Paytm to start onboarding new merchants, right? Because the company will also have to submit an audit report. What is your own estimate?
So as I said, what potentially it adds is a revenue potential from the point of view that this business would start as an incremental, one more incremental driver to the growth. So that is one part of it. How quickly it can culminate into P&L, of course, it could be slightly debatable. But as I said, more than the revenue potential which it can add, it could add that number by 6 quarters that versus what one might be thinking. But it definitely adds up the potential from a re-rating perspective because this was seen as a very regulated business, and now since they are a TPAP, the regulatory challenges for the business are much lower, and thus any such development only adds up to the comfort that the business is cleared from the point of view of any challenges that the business have seen. And it also adds up confidence on the businesses which are still not in the work can also see the light of the day. For example, it could be the wallet business where people would now have a more confidence that it can eventually get clearance on that part as well. So it adds a significant amount of hope and interest.
Okay, looking good for Paytm. But Rahul, as we understand, the approval is only for an online payment aggregator and is not for a full payment aggregator license. Help us understand, in this case, is a full payment aggregator license important, or does the majority of this business come from online itself?
Yeah, so basically they were already aggregating payments for online merchant historically, and they were one of the top 5 players 3 years back as well. But because there was no new onboarding allowed, they were not able to gain share in any online merchant that would have become relevant in last 3 years, and even the mid or small size merchant which one would like to have to grow the business. So that was the challenge. There is no question about full or half. It is more about whether you can serve the existing customer that you have, or you could have new customer as well. So there is now opportunity available to onboard newer merchant, which may not be your current customer.
Indeed, that's positive for Paytm, Rahul. But the other fact of the matter is that the competition as well is seen to be intensifying in this particular space, because like in August this month we have seen IRCTC who also got a similar approval as well. So within this competitive intensity, how do you believe that the Paytm can scale up? And add to that, if you can help us understand, will you be making any changes to the target price post this announcement and after good set of earnings as well?
Yeah, as far as competitive intensity goes, there are certain way the customer look at you from a selection point of view. One is the fail ratio. So there is a RBI data that comes every month which tells you that the fail ratio on payments are lowest for Paytm in India. And the number of transactions that you could process per second is highest in case of Paytm. So both those parameters are best in favor for Paytm. Also, given the kind of GMV they do, they could be very competitive in terms of the pricing that they could get for their merchant and customers. So there is a right to win that exists for them. So competitive intensity, I would say yes, it do exist, but they have a right to win. As far as IRCTC is concerned, they have just got the approval to operate in that business, and they would hire a third party to create a payment aggregation for them, and they could go live as early, could go live probably 1 year or 18 months from now, and they would be sourcing a third party player, and it could be any IT company. So it's not that they are creating the tech. So that way, I would not call them as a very relevant competitor who have got the license in a recent past. But yes, of course, they will also take some piece of the business, mostly from the government side of it, which are low MDR opportunity, but nevertheless, those are important businesses to have. And to your question on whether it changes our target multiple or target price, it definitely adds up our confidence. And since we do a DCF valuation, our ability to think about higher cash flow over a lifetime of the business definitely leads to higher intrinsic value for us. And we would review this into our estimate as well. Thank you.
Right. Okay, Rahul, good to chat with you. Thanks for your time as always. Paytm, of course, is going to be one key stock to look out for, as would be others, which we'll address after this very short break.